Oh man, we are back. Oh, we are back with another episode of FUD Yourself. JD Gagnon here. Just realized that we weren't streaming to Twitter, but now we are. So anybody just joining on Twitter, sorry, my mistake. But we're here. It's Friday. I don't know about you guys. I'm excited for Friday, mainly because I need Saturday and Sunday with no calls to catch up. So super excited that the weekend is here. We're joined again today with a good friend of ours, Patrick Kiefer. How you doing, buddy?
I'm doing great. Happy to be here. Happy Friday.
Happy Friday. This is the final episode of your stint on FUD Yourself in Ceara's absence. I'm pretty sure that the people will be ready to kick me off the island, vote me off the island here pretty quick, and hope that Ceara is back running the show properly here. So anyways, we got a bunch of stuff to talk about today. It's kind of just all things crypto on Fridays. We used to do FU Friday, but we've decided maybe not to be quite so aggressive during the bull market. And so we're going to talk about just a few interesting things that we're seeing in the space. We're going to talk a little bit about Silk Road, if we haven't talked enough about that, and some money that has been moved around from Silk Road Bitcoin. We'll talk a little bit about token mergers and some predictions around that. We will talk about DAOs. Neo-imperialism is on the rise in crypto land. This will be kind of interesting to talk through. We're going to talk about near record high funding rate for Bitcoin, which is interesting. We're going to talk about OneCoin compliance, Binance implementing mandatory KYC, and we're going to finally end on a pretty interesting, sizable investment into Wormhole. And that's important for a whole host of reasons, but I think it's also a pretty interesting indicator of where we're at in the market cycle. And I know, Patrick, you've got a ton of really good ideas. Before we get into the show, though, a quick shout out to Arrow Markets. What is Arrow Markets, Patrick, and how can people learn more about it?
Yeah, so just quick intro for myself. Patrick Kiefer, PhD economist, self-taught software developer and builder, co-founder of Arrow Markets. And so Arrow Markets is an options trading platform. We use an Avalanche backend. We will be enlarging our base layer space to Arbitrum and Base and a few other chains over the next several months. We're currently live on Avalanche, but we have a wait list. So check out @Arrow Markets on Twitter to figure out how to get on the wait list. It's for ex-US users only. But we're really pushing the boundaries in terms of the technology for trading options in Web3. So I really encourage everyone to kind of check out the details.
Meaningful differentiation between what Arrow does and any other options platform that exists or has existed in the space. So definitely worth checking it out. Obviously, I'm a big fan, but I'm also biased. So @Arrow Markets on Twitter, correct?
Correct.
Beauty. All right. Well, instead of wasting any more time talking about me or anything that people don't care about, let's freaking go. All right, we are back, and we're going to start by talking about Silk Road. I have a problem with Silk Road just in the sense that, I mean, its obvious focus was illicit activities and so on, and it was one of the first public awareness campaigns about uses for cryptocurrencies, in particular Bitcoin, which I think we're still trying to get that stain a little bit off the space that, you know, it's only used for illicit activities and so on and so forth. But something that has come up a lot since Silk Road was shut down is what's happening with all the assets that were seized as a part of that. So the US government recently moved 30,175 Bitcoins, which were seized from the Silk Road website in 2022 to two different wallets. The movement, valued at approximately $2 billion, sparked speculation in the crypto community and led to a slight dip in Bitcoin's price. The last confirmed sale of seized Bitcoins by the government was in March 2023, when it sold 9,861 Bitcoin for $216 million. The current movement raises questions about the government's intentions and the potential impact on the Bitcoin market. Is this a nothing burger? What do you think about this? Are they going to dump? Is it going to matter if they dump? What do you think?
I'm not sure if they're going to sell. Obviously, I have no special information about it. I mean, what is the market cap of Bitcoin right now? It's near $1 trillion, or maybe over.
It's well over $1 trillion.
Yeah, so
1.4, I think last time I looked. Let me double check. I don't want to misinform anybody. 1.33 trillion.
Yeah. So I mean, look, if someone tries to sell this all in one trade or within a few minutes, you're going to see downward price pressure, but it's not a big enough fraction, I don't think, of the market cap to kind of have a sustained impact. That's my guess.
It almost feels like the speculation around it has a bigger impact on price than the actual dumping would have on the price.
Yeah, I mean, if anything, you want to just trade vol. You want to be kind of, if you hear an announcement like this and you're not sure if they're going to sell or not, just go long vol on Bitcoin.
Yeah, that's always an option, pun intended. This is kind of interesting. This is pretty normal. I mean, the Department of Justice or whoever has custody of these tokens now, part of their responsibility is to try to recover as much value as possible to pay any, the stakeholders or creditors or anything. And then, of course, they keep the rest, as far as I understand, as part of a budget item. So, I mean, obviously, $2 billion is a lot of money burning a hole in their pocket. So they're probably excited to spend it on DEI or some social cause somewhere. But anyways, I think this is a bit of a nothing burger. I think, generally speaking, if anybody remembers in 2023 in March when they sold some of these assets, then you're a special human being, because I don't think anybody really paid attention nor cared about it at the time. And most people found out about it in hindsight, which means that even selling 9,861 Bitcoins, which is 1/3 roughly of what they moved, people didn't even notice. So I don't know. To me, this is a bit of a nothing burger. We are Go FUD Yourself, and normally I'm pretty fuddy. In particular, yesterday I was super fuddy. But today, I think this is FUD for FUD's sake, and I don't think any of the pullback in Bitcoin personally has anything to do with this, actually, but rather macro forces, the halvening, speculation around that. Yeah.
Interest rates. Yeah, I mean, interest rates and the halvening are probably the first order drivers of the price variation right now. This might have had a little bit of an impact, created a little bit of additional sell pressure, but I would think of it as a blip. It's not something that's going to have kind of any medium or long-term implications for the price.
Yeah, totally agree. All right, well, switching gears a little bit, I think this is something we've been talking about for years, and this is obviously a product, I think, of the lack of barriers to entry. So I was having a conversation prior to the pod today. We were kind of laughing, I think, about how simple it is to launch a token. Like, I mean, literally, almost anybody, myself included, I've launched tokens myself, and I'm definitely not an engineer. And so for that reason, I think the barriers are so low, and the permissionless nature of all of this stuff, obviously, I think creates an environment where we see a ton of these tokens being created day in and day out. And now that we've had, pushing a decade of smart contracts, they're starting to accumulate to quite a few tokens. Another thing that I expected to happen in the last bear market was a heck of a lot more M&A activity. We didn't really see any M&A. We saw a lot of big companies go under, and then we saw a lot of other people kind of restructure. We didn't see much mergers and acquisitions. So anyways, what this article says is that the crypto industry is experiencing an oversaturation of tokens. No kidding. Leading experts to predict a wave of mergers and acquisitions to consolidate the market. It says with over 13,000 tokens, that must be only the tokens above a certain market cap, because there's way more tokens than that exist. And about a $2.5 trillion market cap, the industry is ripe for a shakeup, similar to the .com era. M&As could help streamline sectors like DeFi, NFTs, meme coins, and this all could lead to the creation of combined tokens, such as Shiba Pepes or Floki Doges. I have some interesting thoughts on this one, but the idea here is to reduce redundancy and to reduce the amount of options people have if they're all very similar with very similar risk profiles. I don't mind the thought of that happening, but I'd love to hear kind of what your thoughts are. And then I have some thoughts on why this is actually unlikely to happen, but go ahead.
Yeah, I think there are a couple points to make here. One, you kind of already touched on, which is just the low barriers to entry. And I've written about this, so if anyone's interested, you can look at Substack at Patrick Kiefer and kind of see how I've been thinking about this in the past. But because the barriers to entry are so low, you see a proliferation of these types of projects. I mean, we can think of them kind of as experiments. And so you're able to actually experiment because the barriers to entry are so low, you're able to experiment in the cross-section in large numbers. And so through time, this means you can kind of run more experiments in a shorter amount of time. And so from that standpoint, it can be beneficial because if you think of these experiments as all independent, then you can kind of find the best ones faster if you can, do more experiments in the cross-section. The problem is because the barriers are so low, a larger fraction of the projects will be poor quality. So this kind of dovetails into the second point about M&A. I think there's going to be kind of two things that are happening here. I think we may see some M&A activity. I think during the bear, like you're saying, we didn't really see M&A per se. We saw a lot of restructuring, though. We saw a lot of reorganization of businesses creating partnerships that kind of change what their main emphasis is. And this is typical in a bear market, in economics more generally. So I think this kind of additional experimentation has the impact of lower quality. So a larger number of lower quality projects. So I think we'll also see a larger number of these fail. So it's not that mergers and acquisitions or restructuring are kind of the only way out here. Another way out for these tokens is basically project failure. And I think we shouldn't be surprised if we see a larger fraction of projects fail than we do in other contexts where the barriers to entry are higher.
Yeah, absolutely. A couple thoughts just on this one, just to round this out before we move on. The first one is, again, further to the conversation I was having earlier, it's almost like every new project that exists in crypto goes public on day one. And obviously I'm generalizing, not every project releases a token on day one, et cetera, et cetera. But the point is that you go on these AMMs, you put your assets on these AMMs and they're effectively public. Now, we can't say that with a straight face because obviously it's not public because not everybody globally can buy it legally. But for that reason, you have access to global liquidity on day one. To your point, that global liquidity might be in lesser probability projects than in any other vertical. And so you have to be, pretty careful. But that is the motivation for why everybody's launching tokens and going to market is you can get this instant exposure that you really is kind of a new phenomenon relative to what existed in the past. And so for that reason, I think we're seeing all these tokens. That's the motivation. My problem with the mergers and acquisitions is if you're a token-based project, you have to make some sort of value accrual decision at some point, whether you're token-based or not. And you have to say, okay, where does the value naturally accrue here? Does it accrue to the equity in the business? Does it accrue to the token holders? Is it a split? And how is that going to be managed going forward? The challenge is most projects accrue value to tokens, or at least will accrue value to tokens once there's some regulatory clarity. The challenge there is in traditional finance, there are mechanisms and structures and processes on how mergers happen when a company is already public, because you have all these other investors that in effect have to either agree or sell in order for a merger and acquisition to go through. It's much more difficult in crypto because of the pseudo anonymity and a lot of other kind of market factors. It makes it very difficult to actually execute one of these in a meaningful way. And even then, the nature of the way that these projects work in traditional technologies, and as you go further and further rounds of fundraising, you get diluted more and more and more. In crypto, you start where you definitely don't have a controlling share of voting power from a token perspective. I mean, very few teams, if any, and I definitely wouldn't invest if a team owned 51% of the token supply. But for that reason, it's no longer decisions that can be made by a consolidated executive team. This is something that has to be decided via governance. You don't have an outsized say as an ownership group. So it just adds some new complexities, I think, that we just haven't seen. We've seen a couple of these happen kind of on a smaller scale. TrustSwap last cycle acquired Team tokens, which is like a lockup platform and a few other things. They did that through a token M&A, which was kind of interesting. But to do this on a larger scale, like imagine something like a Uniswap acquiring Sushi. I mean, that's a totally different beast. There's big token holders in Sushi that are venture partners and all these other things. It would be an interesting environment. Any thoughts on that, Patrick, before we jump?
Yeah, I think that's a great point. I mean, there's kind of two things to think here in terms of the logistics about how a merger like this would be undertaken. One is kind of on the tech side from the smart contract standpoint, and to the extent these the tokens involved are upgradable contracts, which is, I know, not always popular in the space. It's something I'm a big fan of. I think it's much more adaptive. But to the extent the token contracts themselves are upgradable, then I think the kind of tech lift for implementing a merger along the lines that you're discussing, the tech lift is low. So I think that's kind of not the hurdle. I think your point is exactly right. The hurdle is more kind of on the governance, voting, kind of coordinating with the DAO side of things. And to your point, we don't really have a clear kind of path in terms of how to carry out whatever coordination needs to happen between those DAOs, between the token holders with the various voting rights and so forth. So I think on the logistics side, the tech is not that heavy of a lift, but the coordination in terms of the voting and the DAOs and so forth, that could get messy quickly. And I don't think we know kind of the right way to do that.
That's actually a really good point. One of the many challenges in mergers and acquisitions in traditional finance is even just simply the legal jurisdictions, and understanding the differences amongst jurisdictions and the complexities there. In crypto, almost all of us are offshore entities, and we have all these crazy corporate structures to protect the protocols and our investors and our users and so on. That makes it insanely difficult and very hard to coordinate, to your point, all of the legal aspects of different jurisdictions. So I don't know. I think I'm not as optimistic that this is going to happen here in the near term, although I like that we're talking about it, because I think there is an opportunity here for people to think seriously about this and build structures and process to actually make this possible. And we might even see an interesting emerging investment banking environment in the space. So
I mean, I think the kind of corporate finance dimension of DeFi is still very underexplored. If I were looking for, to your point, if I were looking for tokens that are more likely to do something like a merger, I would be looking for synergies along the dimensions that you were just discussing, like in terms of the entities, in terms of the community, in terms of what they've done to be compliant in different jurisdictions and so forth. And so, a pair of tokens that have done very similar things in terms of those logistics are much more likely, I think, to see some type of merger activity than two different tokens that have approached this very differently. So I would look for those synergies if I'm trying to forecast where the mergers will happen.
Complete side point. It'll be interesting to see if and how the FTC starts to get involved. If there's like some antitrust stuff, like if Uniswap bought Sushi, is that creating a monopoly, et cetera, et cetera? I think it'd be kind of interesting. But I'm sure people are tired of hearing about mergers and acquisitions. So another interesting statement, claim, development, opinion is that neo-imperialism is on the rise in crypto land. So DAOs should beware. Essentially what they're saying here is the introduction of Wyoming's decentralized unincorporated nonprofit associations, DUNAs, for DAOs. This is actually another point relating to mergers and acquisitions, is also where are the DAOs registered? What are the laws around what DAOs can and cannot do, et cetera, et cetera. Anyways, while this has raised concerns about centralizing decentralized activities in the US. It's like we went 2 steps forward towards decentralization, and now we're centralizing the hell out of it, according to Wyoming and their DUNAs. So this has raised concerns over centralizing those activities. While DUNAs offer legal innovation, their promotion as industry standard by A16Z has sparked criticism of neo-imperialism. Critics argue that the push for a single legal entity type undermines the principles of decentralization and autonomy that DAOs represent and could stifle innovation in the crypto industry. In my opinion, there's many other reasons that we should believe we're leading to somewhat of a neo-imperialism type environment. I'm not sure that this is the only one, but I'd love to hear your thoughts, Patrick. What do you think? Do you think we're heading away from decentralization and towards this kind of imperialistic type environment?
It's hard for me to say. I mean, look, I think we have seen DAOs kind of relearn some of the lessons about corporate organization that humans have already learned,
right.
Even hundreds of years ago, in terms of what the right way is to structure corporations, structure leadership, have a board, have voting rights, but also have executives. And we've seen DAOs kind of start off without a lot of that structure and then run into kind of predictable problems associated with not having those structures, and then have to kind of begin to adopt those structures. And so I think this is just part of that trend, frankly. I would also say I think this is an unpopular point, but I don't know if decentralization should be an end in itself. Decentralization is a means to achieve things, right? If you have a particular application, if you have a particular workflow you want to build out and make available to users, decentralization can play a variety of roles in your ability to deliver that workflow. And it's not an end in itself; it's a means. And so you have to decide how to calibrate how decentralized any particular project or application is. So this kind of general complaint about it's not decentralized enough, I think we have to kind of temper that thinking with, well, what is it that decentralization buys us? And in some contexts, it's much more important than others, but it shouldn't just be, I don't think it's right to think of it as across the board an end in itself.
We probably should do an episode on this. Maybe we've been talking about doing kind of these either monthly or biweekly kind of roundtables with experts on specific topics. DAOs and DAO structure might be an interesting one. Just observations from myself that I think is leading to as much or more of this neo-imperialism, decentralized or not, the legal structure or not. All of that, aside, if you look at concentration of token ownership in all of these protocols, even though it's technically democratic in the sense that one token, one vote, Vitalik has talked a lot about quadratic voting and all these other structures to try to create financial incentives and disincentives for certain activities and so on and so forth. All of that to say, the vast majority of these protocols that are decentralized are actually controlled by a handful of people anyways. The only difference is that handful of people has one motive, personal profit. Whereas the ownership group of a protocol hopefully has more motives like longevity, sustainability, community, adding value, expanding, compliance, all of these things. And so we're seeing this. We see this if you look at the Uniswap DAO, it's almost exclusively massive VCs. If you look at Sushi, it's almost exclusively massive VCs. So it's not the sense of democracy like we think it is. And it'll be really interesting to see how this evolves over time. Particular interest to us because we've been working on governance structures for quite a while on a few projects, and there's a lot of variables. We've engaged vendors and experts to help us, and it's not a simple endeavor. Anyways, okay, Patrick, something that I know is near and dear to your heart is funding rates. And even though a lot of people are suggesting that this Bitcoin pullback is probably seeing its end, I think the funding rate spike and now a new record high suggests otherwise. What do you think?
Yeah, so for this one, I'd be really curious to look at some more kind of historical studies. It's hard for me to say that there is kind of a hard and fast relationship here between the funding rates and the price action. I mean, you could tell kind of stories in either direction. You could see the funding rates go up because there is more intrinsic value in the asset because some news has come out recently. And so there's just a lot of demand for people to hold long positions. You could also make the case that the funding rates are high because the markets are frothy and, the herd is coming in too fast and is trying to get exposure to the upside, but it's irrational exuberance. It's not based on, news about fundamentals. So I think you could kind of tell a story either way here. And I think it would be interesting to do some more detailed historical analysis and look at what the relationship is between, increases in the funding rates and the subsequent price action. And that would be a fairly simple empirical study to do. So it makes me very curious, kind of like what that relationship looks like historically.
Yeah, I mean, correlation and causation are not necessarily the same thing also. And so, I mean, it's worth looking at other factors that are also leading to this. And we kind of hinted about that earlier, that there's many variables that could lead to widening or increasing funding rates. What they're suggesting here is that last time this happened, the price collapsed. My counter argument to that, and then we can move on and wrap up for the day. But my counter argument to that, well, it actually doesn't matter. It doesn't much matter. To sum up, I think ultimately this is not necessarily predictive at all. I guess I will go down the rabbit hole. I have been a fairly significant critic of technical analysis and trying to identify direct connections between something that happened in the past on a chart or some variable that happened in the past and directly implying its causation for something happening now. I've always kind of struggled with that. There's so many factors here. I guess all I'll say is it's maybe worth pausing.
I mean, technical analysis is basically like astrology. I mean, they're very similar in terms of the degree of, closing the logical loop in terms of how you're reasoning about things. Yeah,
I know a lot of people that make a lot of money using TA. I'm just not sure there's a very much an art to it, not just
exactly. But like you were just saying, I mean, the reason it works sometimes is because it happens to pick up on other unobserved variables that are correlated with some of the things happening in the charts. And the technical, the people who do technical analysis are typically not speaking or thinking about what these unobserved variables are, and so they're going to miss a lot of that in a lot of cases.
Yeah, absolutely. Anyways, okay, finally, one last thing that I think tells us a lot about the state of the world at the moment. I'd love to get your thoughts on this one, Patrick. Multicoin Capital, who we all know well and who has been very involved in the Solana ecosystem, co-leads a $225 million round for Wormhole, which is kind of the jump spin out bridge, obviously. Wormhole has had its share of ups and downs, but we're definitely big fans and good friends with the Wormhole team. They support a wide range of applications, including DeFi protocols, NFTs, governance solutions, and others across nearly 30 chains. Their platform focuses on user experience and is adopting zero-knowledge verification to improve security and trustlessness in bridging systems. 225 million. I do not know what the valuation was, but I'm assuming high, north of 2 billion. There's no way that they sold more than 10%. That is a pile of money. What does that tell you? Anything?
I mean, it's huge. Like you're saying, the valuation has to be in the billions for this. I think it reflects the potential for growth across the board in terms of technologies that facilitate interoperability. So I think more and more the bridging, the kind of cross-chain communication infrastructure is going to become powerful. And I think as that improves, and so I think it's kind of a good bet to make. I think as this interoperability improves, as the cost of communicating between chains goes down, we'll see more and more applications that are built with kind of specialized modules that are implemented on different base layers, depending on what the special role of that module is. So I think this is kind of riding that similar wave, and so I'm not surprised by it. In fact, I think we were talking before about how meme coins have been dominating the news cycle. I think it's important to see things like this, major investments in infrastructure, because this is the type of thing that's actually going to ultimately deliver more value to users of applications built on top of this technology.
Yeah, I couldn't agree with you more. I mean, this, in my opinion, is probably one of the biggest 0 to 1s that we should expect to see this cycle, and that is taking this evolving monster of multi-chain complexity and turning it into a very efficient and user-friendly environment. In order to do that, we need solutions like Wormhole, solutions like Layer 0, solutions like there's many other cross-chain CCIP and other things. And seeing investment, seeing innovation, meaningful development here, I think is incredible. Most of these bridges have had their fair share of criticism over centralization, but I happen to know on good authority that Wormhole is working really hard to build, again, these kind of zero knowledge proofs and different things to bring transparency and more trustlessness into what they're offering. So super excited. I guess what this tells me, one thing that this does tell me though, is that the fundraising market has completely flipped from even a few months ago. And I mean, thinking that you could raise 225 million for a project that is effectively pre-revenue or has near zero revenue 3-4 months ago, it would never have happened. And so to see it now, this says, okay, venture investors, builders are buckling up for another meaningful development cycle and investment cycle. And that to me is very positive. We've got a lot of FUD that we've talked about this week, but this to me is ending the week on a good note. Quick reminder to everybody, we are a live show. If you comment, Friday Funday, Ascending Man, that's right. No whiskey on our show, but maybe I think it's book club on Degen Roundtable today. Correct me if I'm wrong, Ascending Man, but if there is book club today, put a post in here so that people can see it. Book club's pretty cool. Degen Roundtable, they do some really neat shit with their book club and a lot of their podcasts. So super excited to check that out. Again, we're live Monday to Friday, 12:30 p.m. Eastern on Twitter and on YouTube. If you want to comment, which we see and respond to live, as you can see, you can do so on the Go FUD Yourself YouTube page, watching the live video or even the replay, and we will get back to you if you have questions. And if you disagree with us, absolutely, please send us notes. Please send us comments. Would love to explore and maybe learn some new stuff that we might be getting wrong. All right. Monday is weekend news roundup. So you guys can go out, touch grass, have some fun. Maybe not look at the charts this weekend if you can avoid it. And we got you covered. You're not going to miss any news. We'll be back on Monday with the weekend news roundup. Patrick, brother, thank you. Thank you for this week. Super appreciate you. And really looking forward to the next time we have you on. With that, I say to you guys, go FUD yourself. Have a good weekend.